Hello, dear learners. Today we will be talking about risk. To understand the basics of insurance, we need to understand first what is risk. After this video, you will be able to understand what is risk, what are the sources of risk, what is the concept of perils and hazards, what are the different types of risks, and different methods of handling risks. So let's start. Let's start first with the concept of risk. So, what is risk? Risk is a part and parcel of our daily lives. It's a very common word that we use in our daily conversations. Risks are all around us, whether we are aware of them or not. We may be familiar with some of the risks, and then there are others which may not have got our attention. For example, whenever you go out of your house, your parents are worried that the possibility of accidents on road is there. So, the risk of accident is involved here. So, we can say that there are risks which we have learned to live with. If we talk about the definition, risks has been defined as the possibility of occurrence of an unfavorable deviation from the expected results. That is, if there is a doubt regarding outcome of a situation, we say that there is a risk. What you want to happen does not happen at times, or maybe vice versa. What you do not want to happen happens. So, when such unexpected events occur, there is surely a sense of loss, which may or may not be measurable in terms of money. Let me give you an example here. When your vehicle gets unexpectedly stolen, so there's definitely a monetary loss. But if your pet dies, you feel a great loss, but then this loss is not measurable in terms of money. Since an unfavorable deviation from the expected always results in a loss, we can also define risk as the possibility of occurrence of loss. Now, our expectations most of the times are positive. We expect our car to be exactly where it was parked in the same condition as when we had left it. And we are surely unpleasantly surprised if we find it is not there or that it is found in a damaged condition, isn't it? So once we realize that our expectations are less than certain, that means our expectations are uncertain and that actual events may differ from what we had expected, uncertainty creeps into our mind. And this uncertainty is something which most of the people are not comfortable with. So, risk, as we have seen, is all about losses, isn't it? Let's talk about some sources of risk or the concept of perils and hazards. Learners, in the absence of possibility of loss, there would be no risk. But it is important to know about the factors which cause or which contributes towards the occurrence of loss or maybe the extent of loss. So there are two such factors, and these are perils and hazards. What are perils? Perils cause the deviation in the events from those that we expect. So they are the, we can say, immediate cause of loss. Their very existence ensures that we are surrounded by risk, for example, like floods, death, sickness, theft, terrorism, etc., etc. So there could be natural perils like floods, droughts, or there could be man-made perils like theft, strikes, and accidents. This was perils. Let's come to hazards. While perils are the direct cause of loss, hazards are the underlying factors which increase the probability of occurrence of any sort of loss. So there are conditions which are more hazardous than others. For example, working as an electrician is more hazardous occupation than that of a teacher because it is more prone to accidents. Another example, Owning a property on the bank of a river is more hazardous than a property in the center of a city, as it is exposed to the risk of damage due to floods, isn't it? So hazards could be physical, it could be moral, or it could be moral hazards. Let's understand what are these. So if we talk about physical hazards, they are related to the physical aspects of the property, which may increase or which may decrease the extent of losses that could be incurred, like the location, or you can say construction of a building. It affects the vulnerability to losses due to fire, due to floods or earthquakes. Moral hazard. Moral hazard also affects the probability of losses which occur, and the risk is increased. How? Let me give you an example. A dishonest person may set his own house on fire just to avail the benefits from the insurance company. Third is moral hazard. Moral hazard is an attitude of lack of concern about the outcome of actions of that person. Let me give you one example here. A person who is careless about stubbing out cigarettes and just throws them around without even bothering that his action may cause fire. So this is moral hazard. Let's talk about the different types of risks now. Risks can be classified in two categories: pure risks and speculative risks. So pure risks are those where, in case of any unexpected happening, the result is only a loss. Whereas in speculative risks, an unexpected occurrence can possibly result in gain or loss. So when a person purchases a property, he is exposed to the risk of damage or loss to the property due to maybe fire. In the event of a fire, if fire occurs, he will suffer a loss, and there is no possibility of him gaining anything if a fire occurs. So this is absolutely a pure risk where there is only a possibility of suffering a loss. Let's talk about speculative risks. When a person gambles or he buys shares, there is a chance that he may lose or he may win, or that the share prices may go up and he gains, or the share market crashes and he loses. So these are called speculative risks. Friends, from the point of view of insurance, only pure risks are insurable. No risk which has a possibility of earning a profit is insurable or is considered insurable under insurance. Let's come to the next slide, which talks about methods of handling risk. Now that we have understood that risks are a part of our daily lives, we must know how to handle them. Under risk management, some of the methods used to handle risks are risk avoidance, risk prevention and reduction, risk retention, and lastly, the transfer of risk. Let's talk about the first one, risk avoidance. So the simplest way to deal with risk is to avoid it altogether. If a factory is to be located on the banks of a river, for example, which is more prone to floods every year, then the owner may decide to shift the site to a safer location. Also, some people avoid the risk of death or injury in an aeroplane crash by traveling through surface transport only, through trains or by road. The second is loss prevention and reduction. So possible loss due to risks may be eliminated or they could be minimized by loss prevention and reduction measures. Let me give you an example. Good manufacturing units, they spend a lot of money on safety devices and measures, and they also enforce strict rules so that they have reduced the chances of occurrence of accidents, and therefore they minimize the losses and expenses incurred on treatment and compensation to the employees. The third method of handling risk is risk retention. It may be consciously decided to retain some of the risks. Small losses, for example, which may occur frequently, may be absorbed by the company as their normal operating expenses, like a minor damage or loss to the goods in transit. So, there could be instances where the owner might decide to retain that risk instead of using any other measure of handling it. The last is transfer of risk. Risk transfer, when we talk about it, it occurs when the activity that creates the risk is transferred to another party. For example, if a particular process of manufacturing is hazardous, the owner may think of outsourcing that particular activity to a third party or to a subcontractor so that the associated risks are also transferred. There are innumerable ways to transfer the risk, but the most important method of risk transfer is insurance. Thank you.